Stock market boom or bust? Powell versus Trump showdown explained. Introduction. The clash that could define the market. As the 2024 U.S. presidential election results settle and the nation braces for another Donald Trump presidency, the financial world is closely watching an unfolding standoff that could reshape markets. Donald Trump versus Jerome Powell. Trump's return to the White House and Jerome Powell's continued role as Federal Reserve Chair create a powerful collision course. These two figures, one representing populist political force, the other the technocratic stability of monetary policy, are poised to clash over interest rates, inflation control, and the direction of America's economy. Will this tension trigger a stock market boom like Trump promises, or a market bust due to policy instability and rate shock? Let's dive into the key dynamics. 1. Background. Trump and Powell's complex relationship. Trump's history with the Fed. During his first term, Donald Trump often clashed with Jerome Powell, criticizing him on Twitter and in interviews for raising interest rates too quickly. Trump believed the Fed's rate hikes were slowing down the economy and hurting his market rally. The Fed has gone crazy. Donald Trump, 2018. Despite these attacks, Powell largely stayed the course, focusing on inflation and maintaining the independence of the central bank. Eventually, the Fed did lower rates in 2019 and then slashed them in 2020 due to COVID-19. Powell's reappointment. Ironically, Trump appointed Powell in 2018, but later regretted the decision. In 2021, President Biden reappointed Powell, something Trump has publicly criticized. Now, with a potential Trump-Powell standoff in 2025, the economic stakes are even higher. 2. What Trump wants: lower interest rates, faster growth, tax cuts, and deregulation. Trump has promised to push through another round of tax cuts for individuals and corporations, along with massive deregulation in sectors like energy, finance, and tech. He believes this will supercharge economic growth and the stock market. Lower interest rates. Trump's economic vision depends on low interest rates to support borrowing, investment, and consumer spending. He's already hinted at replacing Powell if the Fed doesn't cooperate. We need a Fed chair who supports growth, not more inflation fighting, Trump advisor Rover. If Trump pressures the Fed aggressively, markets could rally at first in anticipation of easy money. But this sets the stage for longer-term instability. 3. Powell's mission: fighting inflation, protecting Fed independence. Sticky inflation still a threat. While inflation has cooled from its 2022 highs, it's still above the Fed's 2% target. Powell has made it clear that premature rate cuts could reignite inflation, especially if Trump's stimulus policies take hold. Guarding the Fed's autonomy. Powell is a firm believer in central bank independence. Any attempt by Trump to fire him or influence policy decisions could trigger a political crisis and shake investor confidence. We will not base policy on political pressure. We are focused on the data. Jerome Powell. This standoff could delay rate cuts and create volatility in both the bond and stock markets. 4. Scenario 1. Market boom. If Trump gets his way, short-term gains. If Trump successfully pushes for aggressive tax cuts, deregulation, and Fed cooperation, we could see lower interest rates, higher corporate profits, stock buybacks, consumer spending boosts. Sectors like energy, defense, financials, and industrials may rally under Trump's pro-business policies. Likely winners: oil and gas, eased environmental regulations, banks, loosened lending rules, defense contractors, increased military spending, infrastructure stocks, Trump's America First projects. Momentum rally. In this scenario, the S&P 500 and NASDAQ could surge. Retail investors may re-enter the market, and optimism could lift equities globally. But beware, this boom may not be sustainable if inflation returns or global confidence wanes. 5. Scenario 2. Market bust. If the standoff escalates institutional uncertainty, if Trump moves to fire Powell or bypass Fed authority, it could spook institutional investors, lead to bond market sell-offs, trigger foreign capital flight, erode U.S. dollar confidence. Markets don't like uncertainty, especially from the institutions meant to ensure stability. Inflation fears resurface. Aggressive fiscal spending, a neutered Fed, rising inflation risk. If inflation ticks up again, Powell or his successor may have to hike rates again, despite political pressure. This would crush high-growth tech stocks, small caps, and consumer discretionary. Bond market chaos. Bond yields could spike if investors fear runaway debt or a Fed that no longer controls inflation. This would increase mortgage and loan rates, hurt real estate, slow down economic activity. The Trump versus Powell showdown could also trigger a debt ceiling crisis, adding to investor anxiety. Ash 2025 so far, what the data shows. As of mid-2025, here's how things are shaping up. Inflation, around 3.1%, higher than the Fed's 2% target. Fed funds rate, 5.25%. GDP growth, slowing to 1.7% annually. Unemployment, 4.2% and inching up. S&P 500, up 8% YTD, but volatile. Corporate profits are mixed. Tech giants are doing well, but banks, retailers, and housing companies are showing signs of strain from high rates and consumer fatigue. This puts extra pressure on both Trump and Powell to respond, but with opposing tools. 7. Global market impact. The Trump-Powell conflict could ripple across global markets in several ways. Dollar volatility. If Trump's fiscal plans spook investors and the Fed is seen as weak, the US dollar could drop. This helps exporters but hurts foreign investment. China and trade tensions. Trump has already hinted at imposing new tariffs on Chinese goods. Renewed trade wars could disrupt supply chains and global earnings. Geopolitical tensions. Markets may also react to Trump's foreign policy, including NATO dynamics, Middle East decisions, and Russia-China relations. These factors all impact investor confidence and global capital flow. 8. Key stocks and sectors to watch scenario. X scenario. ExxonMobil, energy deregulation. Lockheed Martin, defense spending. Goldman Sachs, GS, financial deregulation. Caterpillar, infrastructure boom. Bust scenario. Apple, PL, tariff risk, high valuation. Tesla, rate sensitive and regulatory exposure. JP Morgan, JPM, bond market volatility. Real estate ETFs, rising mortgage rates and defaults. Investors need to be selective and tactical. 9. What Wall Street analysts are saying. Morgan Stanley. If Powell is replaced or forced into premature rate cuts, expect a temporary rally followed by longer-term instability. Goldman Sachs. Markets may welcome Trump's return initially, but we see risks of inflation, fiscal overheating, and global dislocation. Investors should prepare for higher volatility and potential breakdown in the bond market if institutional independence is compromised. 10. What should investors do now? Short-term strategy. Watch inflation and Fed comments closely. Rotate into value sectors. Energy, defense, industrials. Avoid overexposure to long-duration assets like unprofitable tech. Medium-term strategy. Diversify globally to hedge U.S. political risk. Build cash reserves for buying dips. Use hedges like gold, volatility ETFs, and TIPS. Long-term strategy. Stay focused on fundamentals. Don't react emotionally to headlines. Review portfolio for Trump-era policy impacts. Conclusion. Boom or bust? It's complicated. The Trump versus Powell showdown is more than a personality clash. It's a structural battle over how the U.S. economy should be managed in a post-COVID, post-inflation world. A Trump-led push for easy money and fiscal expansion might deliver a short-lived stock market boom. But Powell's mission to maintain credibility and fight inflation could mean holding the line and possibly sparking market correction. Investors should stay informed, nimble, and balanced. The coming months could offer both opportunities and dangers, depending on how this high-stakes economic duel plays out.